And good morning, good evening, good afternoon, students and traders and analysts. How is everybody? This is Mike talking to you, Mike the FX boss. How is everybody? Happy Thursday, right? So this is our last lesson of the week, everybody, and this is the big one. Today we are going to talk about the market structure trends, all right? This is the big one, this is the big one. Never forget, this is the professional Forex trading course 101. Alright, and never forget, trading is a learnable skill, and today it's the big one. Alright, try to learn well, okay, and repetition is how we learn, so let's get to it. Wow, right? What are we talking about? The market structure trends. Okay, lesson number 4. And this knowledge today is going to help you to... Probably we're going to have 2 sessions about the market structure trends, also called the market wave, because this is going to help you to understand how to determine what is long term, what is short term, alright, and what is right now. Talking about direction. Would you like to learn what is long term, short term right now? You would, right? And so let's start with some text and some basic concepts and rules. The market structure trends equals to, this is what we call the market wave, right? Just some vocabulary for you to learn, alright? So when you talk about market structure trends, or when you're going to hear me talk about the market wave, alright, we're talking about the same thing. Then another concept, on every single time frame, all right, we are going to have 2 different patterns, all right. Number 1 is the short-term trend, and short-term trends, plural, right? And number 2, we are going to have the market wave. I'm not sure why it's not bad together, all right? So the market structure trends, it's what we call the market wave, not to confuse the monthly bands. And on every single time frame we are going to have 2 different patterns, alright? The short-term trends and the market wave. And one more, alright? The short-term trends are what makes the market wave, also called market structure trends. Alright? It's my suggestion for you to use the term market wave, alright? Just a suggestion, not a rule, because many times we talk about market structure, we talk about... So lesson number 1, we are on NZD-CAD, we talked about the technical market structure, which were the monthly bands. Alright, so maybe it gets confused, we say, oh, market structure here, or the market broke market structure, but market structure are the monthly bands, so you can use market structure trends or market wave just to differentiate the monthly bands and the market wave. Alright? So one more time, the market structure trends is also called the market wave, and on every single time frame we are going to have 2 different patterns. So step by step we are talking about 2 different patterns right now. Why is this important? Because talking about trading, the stop loss goes on the pattern traded, right? Just the introduction of this and so on. And let's go to theory first. I'm going to I'm going to make it like this, alright? So the short-term trends are what makes the market wave, or what is called the market structure trends, alright? So in an up market wave, we are going to have first an uptrend. The market is going to make higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. And we're going to color code this in green. And then after the extension, then the market is going to start to make lower lows, lower highs, lower lows, lower highs, lower lows. So you have a short-term downtrend, and then in some point of time the market is going to change the short-term trend again, and it's going to go to higher highs, higher lows, higher highs, higher lows, higher highs, like this. Alright? And to have the same color. Alright? Now let's go very slowly. So this is the big one, okay? Everybody, talking about lessons and understanding. I know I keep repeating, but I cannot stress enough the importance of you learning well. So what you are seeing right now, it's an uptrend. We didn't learn yet, but you can confirm the uptrend with the trend line, which we're going to delete nonetheless. Then you have the red downtrend, which you can confirm with the downtrend line. And when the market breaks the downtrend line and goes into an uptrend, you have another uptrend line. So do we agree that what we are seeing here right now, it's an uptrend first, market breaks the uptrend line, start to make lower lows, lower highs. We have a downtrend second, market making lower lows, lower highs, and then the market breaks the downtrend line, stops making lower lows, lower highs, and goes back up, start making higher highs, higher lows. So we have another uptrend, and with another uptrend line. Do we agree on that? Alright. Now, very slowly, I'm going to put a rectangle here on this low. This is theory first, then we're going to go on the charts, don't worry. I'm going to put a rectangle up in here on this high, and we've learned what are highs and lows. I'm going to put a rectangle on this low, and I'm going to put a rectangle on this high. Now for the sake of visual, I'm going to delete the trend lines, which we didn't learn yet anyway, and I'm going to connect low to high, high to low, low to high, and I'm going to make it yellow. And I cannot make it bigger, right? I would like to make it bigger, I can't. Or violet, maybe violet. Alright, violet. Okay? Now, very slowly, what you are seeing, the violet, is the market structure trends pattern, or better called, it's the market wave pattern. Alright, I'm going to use the market wave, not to confuse the structure and whatever. So the violet line is the market wave. Okay? And the market wave, when you chart the market wave, you are going to connect the market wave lows and highs, highs and lows. Does this make sense? Okay, this lesson, it's extremely important because I need to start to spatially see and differentiate and not mix apples with bananas. Alright? You are not a trader yet, you are still an analyst, but trying to figure out what is the long-term view or even if you are an intermediate trader, some of you are 4 years, 5 years in the making, you know, you are learning this stuff maybe for the first time, you know, you never thought about like this, or nobody teach you like this, nobody taught you like this, you know. So the market wave is the violet, and you are going to connect the market wave highs and lows, but inside the market wave you have the short-term trend. See? You have the short-term uptrend, the green one, you have the short-term downtrend, and then you have the next short-term uptrend, alright? Now, key point, those two are two different patterns, okay? Why is this important? If we are in here, alright, just an example, if we are in here, are you going to sell the market? Are you going to sell NZD CAT? Or are you going to buy NZD CAT? What would be the correct answer? And it's a tricky question. Alright? Boss, can you repeat please? Sure. Let's say that we are here, me and you are looking at the same chart, you know, but we have two patterns, one overlapping the other. You have the violet up market wave, and you have the red short-term downtrend. To make money consistently, and remember my FX book, it's your report card on how well you learn, what would be the correct answer? It's a tricky question, you know, I'm trying to trick you, most likely I'm going to trick you, you know. What should we do? Should we short the market? Should we sell the market at the arrow? Or should we buy the market at the arrow? You know, and talking about the arrow, I'm talking about the orange one. Orange arrow. Think a little bit. What would you do? As a matter of fact, you are doing this already, just maybe unconsciously, you know, on the 2-hour chart, 4-hour chart, 15-minute chart. And in between, now that you're thinking, I'm going to write another trading slash charting concept. All right, the market wave highs and lows are, we've learned this yesterday with the trends, talking about and learning that not every high and low is relevant. So the market wave trading charting concept, it uses a similar concept. So the market wave highs and lows are the borderlines of the short term trends. And remember, we're talking about extensions and retracements. Okay, something like this. And let me see. There is another way to say, okay, so trading charting concept, the market wave highs and lows are the borderlines of the short-term trends. Okay, so the market wave highs and lows are the levels where the market most likely, probabilistic thinking, most likely, where the market most likely is going to reverse, meaning change direction, right? Change direction. Okay, take a screenshot with take a photo, picture with your cell phone, take a screenshot. Okay, print it out and glue it to the computer, to your desk. All right, So answering the question with the arrow, should we sell or should we buy? Answer, it depends. The correct answer is it depends. Some of you might be thinking, oh, let's short the market because the red one it's making lower lows or highs. Some of you might be thinking, no, let's buy the market because the market wave is up. Exactly, very good. So it depends, okay? Today it's a little bit more complex lesson. Rewatch the lesson a few times, try to figure out, you know, the understanding, try to figure out the charts. It's a lot of information already. So talking about me as an analyst, telling to my trader, which is me, you know, in the end, and trying to figure out, should I buy, should I sell? Alright, it depends. What does this mean? If it doesn't really matter, if I am trying to do something in here, alright, or I am trying to do something or in here, I need to decide what pattern am I going to trade. Does this make sense? The market wave explains on all time frames how is it possible that two traders, now we're talking about traders really, that two traders, or maybe analysts too, they are looking at the same currency pair, they are looking at the same time frame, they are looking at the same spot, same level, and one is going to sell a currency pair and the other one is going to buy at exactly the same place. Alright, if you've seen this, if you're a retail trader, most likely you don't have this insight. If you are, or if you were an institutional trader like me, then you see this a lot. You know, you see these different traders taking totally different positions with different stop loss levels, different take profit levels on the same currency pair, same time frame, entering at the same level. Good news, bad news. So somebody is going to decide that is going to short the short-term downtrend, and there is the red. Somebody else is going to decide to buy the violet market wave, and there is two on the chart. Good news, bad news. Good news. If those two traders, if they know what they're doing, both can win. What's the bad news? If they don't know what they're doing, both are going to lose. Does this make sense? So you as an analyst, I mean, you are demo trading if you're smart, you know, don't play with real money unless you prove to yourself 6 months of profitable trading. Alright, I'm going to show you my FX book in the end. I'm not sure if I showed my FX book already. Doesn't really matter, I'm going to show you again. So the MyFX book, it's your report card on how well you learn. Okay, so today I want you to understand that you have two different patterns on every single time frame simultaneously appearing 24/7 in the Forex market. Alright, and we are going to start with charting first. You need to spatially understand and see on the chart, okay, what is what is the market wave, how to connect the market wave, and what are the short-term trends, how to identify short-term trends, you know, and where are the border lines, right? Because the market wave highs and lows are levels, you know, typo in here, levels, plural, levels, where the market most likely, not a guarantee, when the market most likely is going to reverse change the trend. So change the trend, change the short term trend direction. One more time, take a screenshot photo, and my face is in between, right? My face is in here, all right, or even better like this, you know, my face is in between. All right, give me a second, I'm trying to pick this one too. Whoops, there you go. Take a screenshot photo, you know, with a cell phone, whatever. Okay? So, one more time, recap. You have two patterns happening simultaneously. What changes? It changes where, you know, or the market wave it's in a retracement, or the market wave it's in an extension. But either way, those two patterns are always overlapping and are happening simultaneously. Okay? Now, before we talk about trading and determining the long-term view, the short-term view, and the right now, which would be the case up like in here, you know, what would you do up in here? You know, talking about probabilities, you know, and I want you to learn, so I'm going to complicate a little bit. Let's say that the market makes two lower lows, two lower highs like this. This was from yesterday, you know, and now if you're a beginner trader or intermediate trader or advanced trader, and if you didn't, oh, you are mean, I'm joking a little bit, you know, but if you didn't learn well, now me and you, we are all the same, okay, I'm with you guys, okay, so if we didn't learn well, now in here, we are toasted. We are toasted, man, you know, because our brain is going to freeze, like, oh, what is what, man? I have the violet up market wave, and then I have the short-term uptrend, the green, which I can understand, making higher highs, higher lows. But now the market made two lower lows, lower highs. But are those two lower lows, lower highs equal or similar to the lower lows, lower highs from this retracement? And in 1 year of trading, this makes all the difference. True or true? I'm not going to even ask true or not true. True or true? You know, after 100 times 100 trades or 12 months, this knowledge makes all the difference in an analyst life, not to talk about trader's life. Oh, you are so smart, you know, this is beginner analyst stuff. Remember we talked about that you are not a trader yet, that you are, at least if you are willing to listen to me, and I want to help you to bridge the gap between the understanding how professional traders trade and behind the trading is the understanding of the market, you know, and we clarify that you start as a junior analyst, you know, this is basic stuff, right? This is maybe the most important lesson you've ever heard about charting or trading or just simply understanding how the forex market works. This is the big one, really, you know, but this is really basic stuff. But it's also true if you don't learn well how to spatially see on the chart, and if you are not able to correctly connect highs and lows of the market wave, the market structure trends, and separate, not confuse the two, not to mix apples with bananas, to separate. All right, this is the market wave and this is the short-term trend, and the market wave is up and the short-term trend is down, and I'm on the 2-hour chart. What should I do? Wow, right? as I've been telling you, everybody, download those lessons, send me questions on the email, on Skype, alright? Now, this is theory. We are on NZD-CAD monthly chart, alright? And I'm going to change NZD-CAD to the daily chart, alright, daily chart. Pardon, do we agree that NZD-CAD daily chart, talking about the monthly bands, do we agree that the daily chart, talking about the monthly bands, do we agree that it started up in here? This is the highest high on the monthly band. This is the highest high, the absolute high. Do we agree? Yes, alright. And do we agree that it's not that easy in the beginning? It's going to take some time, but some short-term trends are easier to spot. Some short-term trends are a little bit more difficult. So, you know, this would be an example if so this is the highest high, this is when everything starts, but just for the sake of being simple, you know, I'm going to connect, get rid of the magnet. So I'm going to connect this low to this high to low. Okay, so I'm connecting highs and lows, not all of them, just the relevant ones. And remember, the shortened trend is a sequence of highs and lows. Alright, now do we agree that we just connected an uptrend? And if because it's easier to spot, right, especially if you're a beginner trader. And if I go up to this top, you know, if I connect high to low, low to high, high to low, low to high, low, but this is then not high, low to high, high to low, low to high, high to low, low to high, high to low, low to high. See in here, higher high, right? Higher high, higher low. So the market, it's messy sometimes, but nonetheless, you know, it went to a lower low down to here, and I'm going to put red. Okay, so the market, the downtrend started up in here and finished down in here. Agreed? Sometimes the market in between, it's messy, alright, but it's how it finishes that is going to determine the relevant highs and lows. So up in here the market made a higher high, but nonetheless finished down in here the downtrend. Okay, before it changed directions and went back up, right? Okay, so those two are easy to spot. Now this would be another, come on, trading view, this would be another high up in here. Okay, but if you start from the very beginning, now in here, you know, it's a little bit messy, but anyways, right? If I'm going to connect high to low, low to high, 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 this was a downtrend, but then, you know, low to high, high to low, connecting, you know, all of those, but nonetheless the market made a lower low. See, this is why yesterday it was crucial for you to learn and understand. Now today it's May 9th, okay, it's our last lesson of the week, so you have Friday, Saturday, Sundays to download the lessons from YouTube and re-watch it and learn. Send me questions on the email, alright? So yesterday we learned just to figure out that, alright, this was not all highs and lows are relevant, okay? Now talking about the market wave, this is the relevant high. Okay, the market was in a downtrend, so far down to here, and then the market changed direction. So this was difficult to spot in the beginning. The other one are easy, right? Higher high, higher low, higher high, higher low, higher high. Okay, And if I zoom out, remember from the picture, if you took the picture, the market wave lows and highs are the borderlines between the short-term trends. Okay, so now we can connect high to low, low to high, NZDK daily chart, high to low, low to high, and what you are looking at right now is the violet, is the market wave. And as you can see, this game plays on and on and on until then the market broke the high. So just quickly, you know, it would be the next the market wave low is here, the market wave high is here, and then the market wave, the last low, you know, before it finished, you know, it's here, and it was here, and then the last one is here, and then it broke. Okay, the market wave pattern: extension, retracement, extension, lower low, extension, retracement, extension. All right, and oh yeah, there you go. I need to, let me redo it just quickly. So extension, retracement, extension, there you go. And in between, as you can see, you know, the short-term trend, again, some of them are easy to spot, like this uptrend, higher highs, higher lows, easy to spot, easy to chart, you know. But this downtrend, you know, low to high, high to low, low to high, you know, and seeing here made a higher high, you know, looks like, oh, it's reversing the trend, but it's really not when you chart the market. So it was still all part of a downtrend, you know. You're going to learn about, maybe you've heard about false breakouts, okay, retracement, higher high, higher low, higher high, higher low, consolidation, higher high, higher low, that's the higher high. All right, this is what is going to take you, everybody, practice, 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 practice. But NZDK daily chart, hopefully you can see how the market wave, the down market wave, waves. And hopefully understand why those are the market wave highs and lows, because based on the trading charting concept, the market wave highs and lows are the borderlines between the short-term trends. And lastly, you know, this was the downtrend, right? Lower lows, lower highs, lower lows, easy to spot, you know, easy to chart too. Okay, this is NZDK daily chart. Now, talking about, what's the time? We have a few more minutes. Let's talk about stop loss. Let's talk about some trades, and let's talk about the short-term view, long-term view. Okay, remember, I need you to learn that every single time frame has its own market wave and short-term trends. All right, now let's talk about the good news first. Let's talk about trading. You're an analyst, you're not a trader yet, but the best way of talking about the market wave is this: it's a trading concept, trading concept, trading concept. If the market is going to continue its own market wave, then it must not break the relevant highs and or lows, depending on if you have a market wave, down market wave, or up market wave. Alright? What does this mean? This means that if me and you, if we are trading the violet, okay, so let's say, you know, fair enough, we don't see the future, alright? But NZDK daily chart being in here, alright, now I can connect, I have a confirmed down market wave, I have two lows and two highs on the market wave. The second low, it's a lower low, the second high, it's a lower high. Alright, and I'm trying to short the violet market wave. Now I'm going to delete the monthly band for the sake, and let's say that I'm not skilled, you know, I'm doing mistakes, which is normal. So let's say that I'm shorting the market in here, and delete. I'm shorting the market in here. And the cardinal rule, talking about trading, when 90% of people have problems and don't listen and it's not coachable, trading rule, the forex market, the stop loss goes to the pattern traded. Oh yes, but I don't want to hear yes, but. The stop loss goes on the pattern traded. You're going to be sick and tired of me telling you the stop loss goes on the pattern traded. The stop loss goes on the pattern traded. We're going to work on this logic in the next lessons. It's all common sense, believe me. You know, people tried for the last 500 years to invent hot water with different, you know, super magic robots, indicators, whatever it might be the case. It does not work. Okay? Doesn't work, doesn't work, doesn't work. Oh yes, it does. Show me, call me out and show me some numbers. Show me that you are profitable January, February, March, June, July. Show me. I'm open, you know, to being wrong. I'm open not to know everything. I'm not that arrogant. But I've been around the block for 20 years plus, and I've been an institutional trader, you know, so I'm also not that new, you know. But if you're a beginner trader or an intermediate trader, or if you are trying to be consistently profitable for 5 years, 6 years or more, I would highly suggest you, if your way is not working, and this is common sense, try mine. And this is one of my ways. The stop loss goes on the pattern traded, period, end of story. Okay? If I've entered here, so the stop loss goes on the market wave high, right? Why on the market wave high? Because, answer, no brainer, because if the market goes up and up and up, if the market goes up and up and up and breaks me here, stops me out on this level, this means that the market broke the pattern. Simple as that. Fair enough? I'm not asking you, do you agree with me? I'm talking about fair enough, in the sense of being fair. This is common sense anyway, right? I am shorting the violet market wave. Okay, some of you might be asking, oh, can I buy the short trend? This is for later. Let's talk about the market wave first. Now, I'm not spatially, I didn't train, you know, whatever might be the case, not personal, so I'm not skilled enough, so I've entered prematurely, and you know, I'm going to enter again, you know, or somebody else is going to short the market in here. Just an example. Okay, good news, if you put the stop loss on the market wave, because of this concept, you should be safe. Alright? Two traders entered in different positions, shorting the violet. This was the decision that they made, nothing personal, you know, and the market sooner or later reversed, and it went down and down and down and up and down, you know, and finally confirmed the new lower low. Alright? Not to waste too much time, can you see, or let me ask you a question. Do we agree that if you would just put the stop loss on the market wave high in a down market wave, it doesn't really matter where would you enter, wouldn't we, me and you, make money? Boss, can you repeat please? If we would short the market wave anywhere in a downtrend or an uptrend, you know, being having a different visual or not being skilled, not understanding the market, if I would just learn the skill, and this is a learnable skill, to put the stop loss in the correct place, and stop loss goes on the pattern traded, and in this example we are talking about the market structure trends called the market wave. If I would put, look at the chart, if I would put the stop loss in the correct place, it doesn't really matter where I would short the market, you know, doesn't really matter where we would short the market, because we have the stop loss in the correct place. Would we or wouldn't we make money every single time? Exactly, yes we would. Yes we would. Alright? This is the best understanding, and this is the best piece of information I can give you today talking about the market wave. Alright? Because it's a concept. If the market wave is going to continue, it must not break the market wave relevant high, which is what we are doing. Alright? Next, somebody might be asking, oh, so trading the market wave is better than trading the short-term trends. No, there is no right or wrong. Those two are two different patterns. Okay, this just means just number one, you have a choice. Okay, but it's true that the market wave, because it's bigger than the stop loss level, it's in a safer place. Not guaranteed, just safer. Alright? Talking about somebody might be asking, oh, can I buy the market? You know, can I, just an example, can I go long in here? Sure. You can buy the uptrend on the 1 hour chart, 2 hour chart, 4 hour chart. As a matter of fact, you should. But remember, you need, so today I wanted to learn that you must decide what you are going to trade. Alright? Every single day, on every time frame that you are charting and looking, or some of you might be trading on a demo account first, you know, then you are choosing, alright, should I trade the market wave or should I trade the short-term trend? And it's a lot of information today already. We're going to work on next time with the understanding that shorting the market down in here, it's risky. Why? Because after the extension, a retracement must come. And going long on the uptrend up in here, on the 1 hour chart, 2 hour chart, and there is an uptrend on the 1 hour chart, 2 hour chart, 4 hour chart, is risky too in terms of probabilities. Why? Because the market down in here, it must go into a retracement, and the market up in here, it must go into the next extension. So the market wave theory is going to help you to lose less if you are willing to apply to studying the charts, you know, asking questions, charting, send me the emails with pictures. So boss, would you be so kind and check on my market wave, is this correct, is that correct, you know, am I charting in the correct wave? Alright? before I give you the homework, the last question is, alright, so let's say that we are here, alright, and this goes for timing, and you as an analyst understanding how this market moves. So if I'm the boss and I'm asking you, John or Jane, tell me the analysis of NZD-CAD daily chart at the arrow, what are you going to tell me? Are you going to tell me, oh well, NZD-CAD its long term is up, NZD-CAD long term is down, NZD-CAD short term is up, NZD-CAD short term is down? What are you going to tell me? So before you finish for today, everybody, the market wave, the market structure trend is what defines the long-term view. And when I say long-term, this applies to every single time frame. 15 minutes too. You might be arguing now, oh, but the 15 minute doesn't have a long-term. When we are talking about like this, we are trying to understand patterns. Alright, so if you would have this picture that you're looking at right now on the 15-minute chart, or the 1-hour chart, or the daily chart, your analysis as a good analyst should be, well, boss, or you're talking to your trader, the long-term view on NZD-CAD is down. You don't need to tell the trader, but why? Because of the down, we are still in a down market wave. The violet one agreed. The violet is down. Fair enough. So the long-term view is down, but the short-term view it's up. Why? Because the short-term trend is up. Alright? I don't want to get too complicated and complex today. This is the understanding you must learn, because next year in the Advanced Institutional Trader course we are going to talk about, oh, I'm a day trader, oh, I'm a swing trader personality, oh, I'm a long-term investor, whatever might be the case. Make sense? So not everybody is equal, and not everybody is able to trade in the same way. Boss, can you repeat please? Not everybody is equal in terms of personality. Alright? So if this picture would be on the 15-minute chart, on the 1-hour chart, or 30-minute chart, a day trader would buy up in here because there is an uptrend. Why? Why? Because it's an uptrend. Alright? With the understanding that, alright, the bigger the retracement, the riskier it becomes. This is for next lesson too. Alright? And compared to a day trader who is buying the short-term trend, a swing-term trader, a long-term swing trader is going to wait for the market to break the same short-term uptrend before he or she is going to short, to sell the violet market wave. Enough for today, right? Tell me, oh, would you stop talking, you know, it's too much information and... Alright, homework. Homework, homework, homework. Homework. Go to EuroCAD. EuroCAD. I'm using FXCM as a data provider. EuroCAD FXCM. Is it FXCM? EuroCAD. I'm FXCM. Am I over FXCM? Yes, I am. All right. So I'm showing you the monthly bands already. All right. Homework. I want you to find the market wave starting from the lower band. Remember, this is our last lesson of the week. You have 4 days. I want you to find the market wave starting from the monthly band I want you to find the market wave to correctly connect the market wave. Alright, I'm not going to give you the answer, but I want you to find the market wave, you know, lows and highs, and then connect the market wave. So I want you to chart and find the most recent market wave on EuroCAD. Monthly chart, EuroCAD, weekly chart, starting from the same level. The starting point is the same, and lastly, which is going to be the more challenging, EuroCAD daily chart. And again, you are going to start from the same, the starting point is going to be the same. Alright, so let's write this down. Homework until Monday, chart the market wave, also called the market structure trends. Chart the market wave on Euro. It's the easy one, believe me. It's similar to NZCAD. On EuroCAD, monthly plus weekly plus daily chart. And if you want my feedback, send it to my email, you know. Alright everybody, thank you very much for your time. Never forget, I'm looking for traders. Alright, and before we finish, this is mine. This is, as you can see here, it's come on, now it's going to, alright, so it's demo, you know, it's InstaForex. I don't even know if this broker is still alive. And 2015, this is your report card on how well you are learning Forex course 101. Alright? Sometimes we get into a fight, oh, I'm better than you, or oh, you are right, I'm wrong, you're right, you know. No. My FX book or equivalent, okay? This is the report card on how well you are learning. Plus, don't you dare playing around with real money, because you are going to lose, I promise you, you're going to lose your money. Don't you dare, if you are willing to listen to me, don't you dare playing around with real money unless you can prove to yourself that you can consistently trade on the demo account minimum for 6 months. 1 month it's not enough, you can get lucky. You know, 2 months, whatever. 6 months. Alright? Prove to yourself 6 months of consecutive profits, profitable trading on the demo account. Then we can start talking about you try, okay, now let's throw a few $100 maybe on the live account, you know. But why would you know, because I'm telling you, please believe me, you're going to lose. Okay? And I'm not arrogant, it's the report card, it's the numbers from my FX book. You know? Why, invite your significant other to a nice dinner or a vacation. Don't play around, oh, I'm going to throw $200 or $2,000 or $20,000 and I'm going to just try. You are going to lose. I promise you, you are going to lose. Alright? It's a learnable skill, alright? You can learn being a trader, but it takes some time. There is a lot to learn. Alright? Now this is your report card, this is what you should aim at. You know, I did this for 2015, you know, on the demo, 2016. Alright? This was me as a retail trader. You know, I got out in 2010 out of the corporate world. Alright? So this was me back in time, and as you can see, profitable. Alright? That being said, everybody, thank you very much for your time. Learn well, repetition is how we learn. Okay, rewatch the videos a few times and see you back on Monday. Have a great weekend. This is the boss signing off. Have a great weekend, everybody. Ciao.